You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again on a Thursday to break down all the wild action in the world of futures options. Yes, it is time once again for TWIFO, This Week in Futures Options, a program where the name pretty much says it all. My name, of course, Mark Longo from the THE OptionsInsider.com, as well as from the network upon which so many of you are binging these days. Back in the Chi-Town studio after an extended sojourn to the southern studio there. So I hope you folks are having a good start to your trading year here in our second week of the trading year. A lot to unpack. Remember, if you do like what you hear at this show, anything else on the network, throw a like, a comment, a star, a rating, a review. All of that in aggregate at the end of the day does help new people continue to discover the content. Then, of course, if you want to go above and beyond, you want to join us live for this show, everything else we do throughout the network, and of course throughout the week, you want to get in on the pro Q&A sessions, which are, admittedly, I'm biased, but they are pretty freaking awesome. Or, of course, options oddities at the end of the week. You want to get your name in the hat for all sorts of giveaways and get exclusive stuff like maybe some action on that panel we're going to be doing next week, myself and the Flow Master and JJ Kinahan from IG and a bunch of others over there at STA. Maybe we'll find a way to get it up there for the pro folks. Only one place to go to learn more about all that fun. The optionsinsider.com/pro is the place to go. As we go around the horn, see who's joining us in the old CME Group hot seat, I am pleased to welcome back for the first time in the new year our good buddy, Mr. Russell Rhoads, man about town in the world of options now and holding court when he's not talking to us here on the network, corrupting young minds over there at the Kelley School of Business. Mr. Rhoads, welcome back to the show, sir.
Thrilled to be here. Thrilled to be calling in from one of the southern meccas of futures trading, Indiana.
Indiana, indeed, as we keep on rolling right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers Report.
All right, everybody, welcome to the Movers and Shakers Report, the portion of the show where we break down what's lighting it up out there this week in the world of futures options from everything trading along over there at CME Group. Of course, you can find this report for yourselves if you follow us on Twitter at Options. You follow the folks at CME, you can find it. We always put it out right before showtime there as well. A lot to unpack. Before we get into this week's action, though, Mr. Rhoads, like I mentioned, this is your first time joining us in this new year on TWIFO. So let's start by looking back. It was a wild, a crazy, a topsy-turvy year in the world of futures options. When you look back on the year that was 2023, sir, what stands out to you?
Yeah, the thing that really kind of stuck with me was the oil market, which is not something I trade very often, but something I pay a lot of attention to for kind of a macroeconomic read. And as much dog-eat-do, positive and negative, that we dealt with that should impact the oil market in 2023, it did manage to stay in a range between 65 and 85. We never really got a huge breakout in either direction. Probably should lob a call to Carly to find out if she's got some more insight into that one. But it feels like it was a real tug of war between the different macro factors that impact oil. And I didn't feel like toward the end of the year we got the kind of read that we normally get for oil to hold support. So I was kind of surprised that it held support, or which I would say would be the 65 to 70 range, through the end of the year and into this year so far. Part of me actually expected that to fall down a little bit. Maybe it's the geopolitical stuff that's holding it up a bit. If you're shipping and selling something that people like to throw kamikaze drones at, there's probably a little extra risk in that commodity, wouldn't you think? But
drone attacks tend to inflate the vol a little bit. Yes,
you would think so. But and you and I are old enough that we kind of came up trading wise where there was always a $5 to $10 geopolitical risk premium in the price of oil, and I don't feel like it's ever come back since after Saddam Hussein was finally kind of done away with. It just seems like that, and I keep expecting it to come back. We're trade war with China, not allowing Russia to ship oil. Bunch of other, Iran's pretty upset. They just grabbed an oil tanker that used to belong to them that we took away from them. So I don't know who really is it. Finder keepers? I don't know.
I do believe that's how international maritime law works. Finders keepers, losers weepers.
I like that.
The code of the sea.
So oil's the really one. If I had to look back on 2023 and go, I just don't get it. That's the one that I just really am surprised at the price action around it. Not overly shocked at the equity price action. That it was what it was. And that's the area that I usually spend most of my time paying attention to. We came into the year with not very high expectations. And if we come into a year with kind of low expectations about stock prices, that means there are a whole lot of people that don't own stocks that are out there to buy stocks. And I guess that's what happened to us in 2023.
And those magical two words, the two letters, I should say, the two letters of AI. Just whisper AI, sir, and all things go north. Would you care? We did a fun show last week with our buddy, Mr. Dan Gramza, kind of doing the top 10 movers and shakers to the light side and the dark side for 2023. Would you care to hazard any guesses for maybe the top loser or top winner of the year from all the things that were trading on CME last year, sir?
From last year? Oh, goodness gracious. Lumber.
Lumber, normally, I will say this, normally lumber is a shoo-in. Lumber was the most volatile product we talked about from, I would say, 2020 to about 2022. Kind of fell off the radar last year.
Guess came from was because I remember it was really high.
Yes.
Periodically in 2022. So that would, I think that's probably as good a blind guess to the downside as anything. I mean, I would assume NASDAQ might have been the upside one.
NASDAQ, very good guess. Number 2, sir. Up 50.11%.
Usually I cheat, so I sound smart, but 2024 is all about honesty.
So I'll give you a hint. The number one light side mover over 3x the NASDAQ.
What in the heck? Oh, Bitcoin.
Yes, there you go. I was just going to give you another hint, but I was going to say most of it happening in the last quarter of last year. But yeah, Bitcoin 164.78% for our number one light side mover last year. The number one dark side mover, Mr. I won't make you guess. You can probably hazard a guess for Nat Gas, probably going to be somewhere in there. And it was number two off exactly a third, 33.3% on the year. And then Palladium, our number one dark side mover last year, Mr. Rhoads, off 42.2%. And then corn coming in number three, right around 29% to the dark side. So intriguing stuff. If you missed it, listeners, our first show of the year, a fun breakdown of everything that moved and shook last year out there. So keep an eye on that as we fast forward into this week, Mr. Rhoads. And looking at the chart this week, again, kind of a crazy week here. Last week to start the year, and now this week as well. Mostly red on the screen, even though we have seen some moments of green. That's why our movers and shakers report for the past week is heavily biased to the red, listeners. I'd say it's 80-20 red over green this week. But that said, Mr. Rhoads, where should we begin our journey this week? To the light side or to the dark side?
Oh, let's get the dark side out of the way.
All right, to the dark side we go, listeners. Again, you can find this report if you follow us at Options or if you follow CME on Twitter. You can see them both. One of the few premium reports from Bantix that we give you folks access to because we like you. If you want to see the rest of them, of course, head on over to bantix.com. Click on the free trial. All right, let's kick this off here now. To the dark side we go. I just flew in last night from the Southern studio, and boy, are my arms tired, listeners. All right, number 5, Mr. Rhoads' favorite, the aforementioned lumber. I was just saying, man, it hasn't been on our movers and shakers in a while. And now here we are back again. Number 5, lumber off 2.87%. If you've been listening to the show for a while, you know that's not a heck of a lot for lumber. It could move 15, 20% in a week, no problem. So a little bit shy of 3%. Not blowing the doors off, but enough to get you the number 5 spot this week. Number 4, we keep it in the ags, this time out of the softs and into the beans, in particular soybean meal, off 3.24%. Again, lumber, you know the deal, listeners. Not a lot of options paper to be found out there, but soybean meal, we could certainly sink our teeth in there, off 101,000 contracts. Number 3, keeping it in the sectors. The S&P sectors everyone's fixated on these days. It's the energy sector, off 3.36%. And then going from the equities to the metals, listeners. Number 2, it's palladium, off 4.56%. It was number 1 in the same direction last week, off nearly 9%. So a rough start to the year for palladium. And again, total volume of 209, so not exactly a banger product to sink our teeth into. And number 1, keeping it in the P-named metals, we're going to platinum, off 4.87%. This was number 2 in the same direction last week, off 5.64%. Platinum does a little bit more paper, but still not a ton, about 1,200 contracts on the tape for platinum. So of our dark side movers, we could certainly sink our teeth into soybean meal if we were so inclined. Now to the light side we go, listeners. Number 5, keeping it in the equities, in particular the sectors again. This time the tech sector getting back some of what it gave up last week, up 2.83%. It was number 5 in the other direction last week, off nearly 5%. So again, rock'em sock'em start to the year for the tech sector. Number 4, off to energy. It's heating oil, up 3.03%. It was number 4 in the same direction last week, up 2.14%. So again, up a little over 5%. So a decent start for the year for heating oil. Not an explosive product, pun intended, but does some paper, 3,700 contracts out there. Number 3, off to the international indexes, in particular the yen-denominated Nikkei, up 5.18%. Again, not a huge option stalwart there. Number 2, back to the ags. It's oats, our old friend oats. This thing can move up 7.25% this week, but again, only 5 contracts on the tape, so not exactly a banger name to sink our teeth into. Again, pun intended. I would love to talk more about oats options. It's just not there yet, unfortunately. And then the number 1 light side mover this week, listeners, lean hogs. So keeping it in the ags, moving to the livestock, up 14.19%. We know the hogs do some paper these days, listeners, with a 90,000 contracts on the tape out there in the lean hogs. So a lot of potential starting points for us this week, Mr. Rhoads. We can go with some of our movers and shakers. We could go to lean hogs. We can go to soybean meal. Or perhaps there is something else catching your eye you want to start with this week, sir.
I want to mention one thing that's non-option oriented, just to put a little bug in everybody's ear. The the financial sector. We don't talk about earnings on TWIFO very often, but if you like trade and volatility and stuff, a good portion of the financial sector index, which is a sector ETF as well, a big portion of the big banks report tomorrow. So if you're really bullish on banks or really bearish on banks, you might want to take a look at that sector within the futures markets. I'm working on a systematic approach to trading those sectors. I used to do it with ETFs, and once I get that thing done, the first place I'm going to talk about is right here. How's that?
There we go. Yes.
I know I just totally went out, took a left curve on you, and I promise because I know you're running on fumes, I won't do that again to you. But just did because you brought up the sectors. I just wanted to mention the financial sector one might be a fun one to watch tomorrow.
Indeed, we were just talking about that on the option block on the last hour. A lot of big names popping off tomorrow, listeners. You have Citi, you have a bunch of Bank of America. If you want to see all the names popping off and what they're pricing in from their earnings straddle perspective and what they've done in the past from an earnings vol perspective. Luckily for you, we have that data. We're giving you folks free data all the freaking time here. TWIFO reports, earnings vol reports. You can find those on our website, theoptionsinsider.com. Click on the Options News and Articles tab. To begin your journey to the dark side, we have all of it there. Earnings season reports, earnings trades, all sorts of fun. So you too can sink your teeth into some of the earnings vol fun that Russell was just mentioning as we kick off the show in the ags this week.
It's time to get our hands dirty exploring the latest options trades and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, listeners, to the wonderful world of ags we go. Go off to that drop down over there, cmegroup.com/TWIFO. And then ags are easy to find. It's an alpha order list after all. So you're going to start right at the top of the list in ags. Normally we start in grains and oilseeds because, as I just mentioned, we've got lean hogs lighting it up to the light side. I know Russell can't stop talking about the livestock. We're going to go down to livestock. Going to go down one more slot in the product category to lean hogs. You will see it is quite the banger. Nearly 90,000 contracts on the tape. Mr. Rhoads, I can recall a time not too long ago when lean hogs would, do few thousand contracts. When it got up to 30,000, that was a big deal. Now here we are threatening 100,000 contracts in the hogs, sir. So perhaps there is more data, more fun to be mined in the hogs than maybe we initially assumed, sir.
Maybe it's I've still been on a bit of a strike with respect to hogs because they did away with pork bellies.
You're out,
but that might have something to do with it.
You washed your hands of the hogs.
I did. I was a little because I just love saying pork bellies every once in a while. Now I say that and nobody knows what the heck I'm talking about.
And you're a good Chicago boy, so I'm sure you think they are quite delicious.
Yeah, very much so. So,
all right, to the world of the hogs we go, listeners, again. And you will see right now, if you don't follow lean hogs, and you'd be forgiven if you don't. There's a lot of products out there to keep your eye on. Lean hogs coming in to start the show, that front future, 72.70, up 270 or nearly 4% just this week. So a nice little move here. Of course, if you go back to the end of our show last week, up nearly 14, over 14%, I should say. So a banger week here for the hogs. And again, nearly 90,000 contracts. And we always talk about 0 day. The livestock, not really a bastion for near-dated liquidity, let's just say. Not the place where you're going to see a lot of 0 DTE straddles and strangles going up in the hogs. No, instead, we do have a lot of front-month paper, though. These have about 34 days to go. These are the Feb contract here, the Feb expiration cycle. About 44% of the paper going up there, so we're going to hang out there as well. What is the vol, you might be wondering, in lean hogs? It's just shy of a 20, 19.99 to be precise, off about 3.5 points. So hogs, not the most volatile product on the planet, but also not the lightest either. It's definitely north of VIX right now, but below a nat gas and some of the other products we talk about out here. So finding a nice little spot for itself. If you go a little bit farther out the curve, listeners, out to, let's say, in April or in May, you start seeing a 23, almost a 24 vol. So does get a little bit more volatile if you go out a few months, but the front contract right around a 20 right now. These numbers are bonkers. Listen, you should look up the report just to see these. I'm looking at the quick skew numbers right now. Again, this is comparing the 25 delta put and the 25 delta call. And I'll have to reach out to our buddy, Mr. Nick, because these are some crazy numbers. See if anything really aberrant went on in the hogs last week, because we had the puts last week, 36.2% bid versus the at the money vol, which was around a 23.5. So 23.5 at the money vol. The puts were 36% bid above that. If you want to get your hands on some puts, you were paying up a bit. The calls, 26% offered. So nobody wanted the calls. It was all about the puts last week. My goodness, we don't see those types of skews shaping up in many of the products we talk about here, listeners, which is why I'm wondering if maybe that's a weird aberrant print. We come into this week, listeners, and the skew is almost entirely flat. 0.4% bid to the puts, 0.5% discount to the calls. So all of that went away in a week. I need to go dig in a little bit more, but you're looking for some funky skew action. Maybe you should be looking at the hogs a little more, listeners. And in terms of that action, let's see here. What do we have on the tape here? The big dog this week, the 70 puts in February, again, going out in about a month, doing 3,600 contracts. The big day for those, Tuesday, 1,300 going up on Tuesday, mostly opening, about 1,000 on Wednesday, so closing on Wednesday, 700 today, 650 on Monday. It's like opening earlier in the week and then closing later on in the week against an OI of about 7,700 on that strike. So again, a decent size paper. And then right behind it, we have the 69 puts going up 3,400 times this week. Again, the big day was Tuesday, 2,300 mostly closing there. So maybe they closed and they rolled up to the 70 puts. It's possible. The rest of the week, not much, 200 to 400 every day. So the big day for the 69 puts all on Tuesday. So Tuesday was the banger day for some puts in the hogs, listeners. Right behind it, we have the 68 puts. So 70, 69, 68. Got a little put strip going up here, listeners. 3,300 of those this week as well. The big day for those actually today, 953 today. So almost 1,000 today. Almost 1,000 on Tuesday as well. 700 and change on Monday, 600 and something on Wednesday. It's like mostly opening again earlier in the week and closing later in the week. Again, and about 6,000 open on these strikes. So decent volume, decent OI on these things. And if we go out 1 month here, we actually go out to the April contracts here. You see the 70 puts also going up about 3,000 times in April this week. So a lot of put action in the hogs. And again, the big day was Tuesday. It looks like a 70-78 put vertical might have gone up about 1,600 times because they both traded for size on Tuesday, both opening. So 78-70 put vertical also going up. It doesn't look like a roll. It's opening on both. So size put. Those all puts all the time. Mr. Rhoads, I know you're not talking to me. You can't stop looking at the hogs. Anything catching your eye out there this week, sir?
Yeah. So just a little bit of clarity on that really high put implied vol. If you're trying to get the 25 delta put, you're looking at the 70 strike right now, and the 70 strike, the implied vol for the 70 strike that expires in February is 11 points higher than the 69 strike and 8 points higher than the 71 strike. So I think demand at that 70 strike is what's making that skew look so funky on the downside.
That could certainly be the case. Something is to blame for that. That's not a level we see very often here on the show. That's certainly left off the page.
No, it really is. The trade that you mentioned, I'm assuming it is 100% associated with that trade. So there's always a reason behind the numbers. We just got to snoop around a bit.
We have to suss it out. As we keep on going, let's hang out in the ags for a little bit, listeners, as well. Let's go out to another one of Mr. Rhoads' favorites. Let's go out to soybeans. Let's get out there. Let's see if I could click on the right button. That would certainly help. All right, off to the beans we go, listeners. Pop on out of the livestock. And then you're not going to go to the it's easy to hit the wrong button. Don't hit the soybean CSOs. We're not going there. We're instead going to the grains and oil seeds. And because it lit up our dark side at number 4 this week, off 3.25%, we're going off to the meal. Again, over 100,000 contracts out there. So the ags putting up some numbers out here this week. And again, about 103,000 on the tape right now in soybean meal. Where's soybean meal hanging out? 361.9 off 7.5 points just since Monday, or a little over 2%. Obviously, you go back to end of our show last week, it's off about 3.25%. And what is the vol? You might be wondering out there in soybeans. Again, this is another one where the data could be a little bit confusing if you just glance at it quickly, because that front contract is about a 50 vol, but it's also going away in about a day. So it's all gamma. So that vol number is nonsense, listeners. You might say, wow, soybeans, almost as volatile as nat gas or crypto. Nope. You go a little bit farther out to where calmer, saner heads are prevailing. And there is some decent near-dated liquidity in soybean meal, by the way. They have weeklies going out in about 8 days and about 15 days. You look at those contracts and the vol settles down to around a 25. So much more manageable. Still decently frothy compared to where we are in things like VIX, or even what we were just talking about in lean hogs around a 20, but also not an explosive 50 either. So in terms of paper this week, again, about 103,000, a little over a third, 35.5% going up in the March contract that has 43 days to go. So we're going to hang out there. Let's see, 361.90 is where that future is hanging out right now. And the vol in the March contract, about 23.5, off about 3/4 of a point. In terms of skew, no crazy aberrations in soybean meal this week. Just the facts, ma'am. The puts last week, 1.3% cheap this week, about flat. So not a heck of a lot of evolution there. The calls last week, a slight bid, about 1.9% bid this week, also about flat. So not a heck of a lot going on out there in the skew front. Mr. Rhoads, anything catching your eye out there in the land of soybean meal, sir?
Well, it looks like if you go out to April, June, July, maybe there's a little bit of a bullish bent to things with the skew, but in the near term, it looks like a nothing burger till about then.
A tasty, delicious nothing burger, listeners. We're going to go out, though. What is the number one most active contract lighting it up out here in soybean meal this week? It is the March pars, the March 400s. If you had that on your bingo card, that's a winner chicken dinner for you, listeners. Lighting it up to the tune of 4,400 contract. You know what? Actually, I take that back. I buried the lead. We're going to go one past that, listeners. The March pars are lighting it up to the tune of 4,400 contracts. But instead, if we go out a little bit farther, we go out to the May 370 puts. That is where our winner chicken dinner actually is. So scratch that bingo card winner from earlier. You're going to win on the 370 puts, going up about 6,300 times this week. Looks like folks getting the heck out of Dodge on that strike this week. The big day today, 2,000 today, and then 1,500 each Tuesday and Wednesday, and about 1,200 on Monday. Looks like closing all week long. So somebody was getting the heck out of Dodge on the 370 puts out there in May. OI was 8,200 coming into today. So clearly they have more to go if they are unwinding out there. So a lot of paper coming off the top. Also, the 340 puts pretty active as well, about 43, almost 4,400 of those going up as well. So almost tied for number two. The big day for those also today, 1,200 contracts on the tape today, 1,700 on Monday. So a lot going up on Monday, slightly closing there, and then a few hundred each Tuesday and Wednesday. So intriguing stuff out there. Again, open interest there, about 5,500. So anyone's guess what the OI is going up to today. Maybe they're closing on the 370s and rolling down to the 340s. That's an intriguing move, and we're hanging out at about 361. But we are through the 370 put strike, so got to find a new home for those puts if that is indeed your intention. And then let's go back to the contract that started it all. Let's go back to the March pars, the March 400s, going up about 4,400 times as well. So you pretty much have a tie for the number two spot, listeners. And again, these going up 4,400 times this week. The big day was Tuesday, 1,400 on Tuesday, about 1,200 yesterday, about 1,000 today, and 800 on Monday. Seems like opening all week long. So we got some open and upside call paper here in March, which is kind of interesting. Like I said, we don't see a ton of evolution on the skew. If anything, the skew got a little bit flatter. So somebody could be coming in and overriding these, but it's hard to read in a lot with such a negligible skew change. So it's really hard to tell what exactly they were up to. And right behind it, we have the 390s. So if for some reason the 400s not floating your boat, maybe the 390s are more appealing to you. They went up, 2,200 of them went up on Wednesday, 1,200 today, and then not much the rest of the week. So about 3,800, most of that yesterday and today. And opening yesterday, and again, the OI coming into today, about 3,800. So intriguing paper on the 400s and 390s. Mr. Rhoads, anything else catching your eye out there in the land of the meal before I let you choose our next asset class, sir?
Just the you were talking about those May 370 puts. Um, Looking through the tape, and I'm going to say I'm 80% certain on this one. It looks like they're covering a short puts and maybe rolling them down.
That did seem like that was the case. Yeah,
that's what it's looking like to me.
Closing the 370s,
kind of stuck short there.
You think they're rolling short, so maybe they're drawing a new line in the sand at the 340 level, this far and no farther.
Something along those lines. And what's funny is the highest, the 25 delta skew. As you go down the list, the highest one is those May options. The 25 delta skew for the May options is 3.4. It's below 2 pretty much for every other figure. And that 3.4 is probably a function of somebody covering a short, which is not necessarily bullish. Or I'm sorry, not necessarily bearish. They're giving up on it, so, and rolling it down a bit. So that it's interesting to see the call skew so high with that number, on that line relative to the put skew. But I think the put skew is artificially inflated by short covering.
All right, Mr. Rhoads, I made you slum it in the ags long enough. I shall now reward you by moving on into your favorite asset class, the equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody, welcome to the wonderful, the topsy-turvy these days. Just look at today. Man, we had some whipsaw action going on out there. Oh, well, now we're pretty much green in almost everything today. So right back up. We had a sell-off and then a rally and then oh my goodness, what a day. Whipsaw on the agenda again this year. If you thought we were done with the whipsaws, listeners, not, I think, today. Let's go on out to the land of the equities. You know where to find it, listeners. Pop out of the ags, go down 3 more slots to equity indexes. This is usually where I'll tell you maybe we're going to drop some analysis in the S&P, maybe even the NASDAQ, but I think we're going to skip those two. Well, maybe we'll have time. We can come back to them, but I think we're going to go out to a product that is certainly very intriguing to me these days, and it is also Russell's namesake, the Russell 2000 out there, adding more weeklies to the list now. We're getting the Tuesdays and Thursdays, so completing the cycle over there that we've seen in other products that have caused this, 0-day explosion. So maybe that will matriculate to more volume. Certainly looks like a pretty decent week. Again, we used to have Russell 2000 on the show literally every week, and it would be a banger week to have 10,000 contracts go up. This week already 46,000 on the tape. So Russell 2000, a very different beast now than it was, let's say, even a year ago. Mr. Rhoads, I joke, it is your namesake, but I know this is also an asset class and an index that you've been paying a lot of attention to. Certainly an intriguing one to start the year. What's catching your eye in the world of small caps, sir?
Well, mainly, we had that run up toward the end of the year, and we started to see the Russell 2000 had a really good December, and we were seeing the fear of missing out trade in the option market, where you were starting to see the out of the money calls catch a bid for the Russell 2000, and that it's like that just hit a brick wall. It's like just a few days of a bit of panic. Better buy some Russell calls just in case it's up another 5-10% the last couple of weeks of the year. And we hit January 2nd, I guess would be the first day of 2024, and that activity just went away. And I don't know if it's because everybody's starting over at zero or what, and that people were worried that they were missing the small cap catch up in December. But it was a very short-lived bullish signal that I was seeing from the skew that's just really not there anymore.
Folks, fade in a little bit of Russell now. Let's see what's going on out there this week, listeners, that's causing all this paper. Coming in to start the show, that front future in 1969, roughly, up, I should say, about a little over 2 points. So kind of unched on the week out here. But let's scroll a little bit farther to see what's cooking out there. Again, some decent volume numbers. If we did a volume movers and shakers, in terms of compared to their previous numbers, Russell 2000 would certainly be on the list. And it looks like, everyone's obsessed with 0 day. In fact, we just broke it down on our last show, listeners. Right now, the SPX doing quite a bit of paper today, as you might imagine. And of the top 40 most active contracts in the SPX today, 40 for 40, all of them expiring today. It's an entire 0-day bonanza out there. So completely reshaping the equity options landscape, except when you're looking at the Russell 2000. They go all the way out a whopping 8 days. That's where about 30% of the paper this week has gone up. So we're going to hang out there as well. The vol 8 days out in the Russell 2000, about an 18.5, off about almost 2 points, about 1.8 points. So vol coming in there, still north, obviously, of where VIX is, which is what we expect. Small caps should be structurally more volatile than large caps. So decent little premium out there, the Russell 2000 versus the S&P 500. In terms of skew last week, the puts 1.5% bid. This week, 3% bid. And the calls 0.4% bid this week, 2% cheap. That kind of goes back to something we've been talking about for a while. I'm scrolling here, Mr. Rhoads. If I go all the way out to March, I can find a roughly 10% bid for the puts. Actually, I can find 11% if I go out to June. And then if I go all the way out to Dece, it's 14.5%. So you can find a bit of a bid to the puts, but you got to go out a ways. And that's something people have been commenting on in other equity indexes right now as well, is that the puts not quite as bid as you might assume given everything else going on out there. Anything catching your eye from a skew perspective could be in the Russell 2000 or it could be in the other indices. Are you noticing this, maybe the puts not quite as juicy as you assumed right now, sir?
There are not a lot of people that are bearish going into this year. You know, I mean, and it totally is showing up on the option side of things. But yeah, everybody, we came into 2023 and everybody was worried. You could feel them. You could feel that panic out there. I can feel them panicking. Coming into 2024, everybody believes that lower rates are going to result in a decent stock market for the year. No reason to hedge ourselves. And if people are not, if they're not buying protection, then the protection is going to start becoming cheaper due to the lack of demand. Now, I'm not saying I agree with what I'm getting ready to say, but I will guarantee you that there are some folks out there that are going to say that, well, there's no bid in the puts because everybody can hedge themselves every day. The folks that use longer dated options to hedge themselves, the professional portfolio managers that have been doing it for decades, they're not switching to 5-day options. If something has been working for them, they're just not going to do something along those lines. So I don't think it's a function of a change in market structure based on the shorter dated index options. I really do think it's a function of what people are thinking out there. And people aren't particularly worried about the equity market in 2024 like they have been going into the past couple of years.
A buddy, Mr. Matt from Rhoads, not been on TWIFO, he's been on some of our other shows, and he has made that argument that he thinks 0-day is kind of muting some of the skew, mostly because of the way the market makers are using them to kind of hedge their books intraday type of thing. So it's an interesting debate, one I think we'll have in more detail next week on the options panel coming up next week at Stackless. If you want to check it out, head on over to the Pro. We should have it for you there next week sometime. In terms of the action out there this week, it is going out to February. The Feb 1800 puts. We just talking about nobody wants puts. Look at the 1800 puts, though, they're trading this week to the tune of about 2300. That was the big dog out here in small caps this week. Most of that going up on Monday. In fact, Monday was a put annihilation palooza out here in the Russell 2000. We had about 1,800 of the 1,800 puts going up, so appropriate. About 750 of the 19.5 puts, 600 of the 16.5 puts, about 500 of the 17.5 puts, a couple hundred of the 19-quarter puts. Pretty much all of those closing, all on Monday. So somebody was bailing on a whole heck of a lot of puts out here. It doesn't line up like a fly or anything. It just seems like folks were taking stuff off the table on Monday, and hence the big dog this week, 2,300 of the 1,800 puts in February. If you want to get a little bit closer to home, because of course you do. You're an equity options trader these days. You want to trade near-dated stuff. Let's go up to the 2,100 calls expiring in 8 days. That's still an eternity, but not as long-term as the Feb puts. And we saw about almost 2,000 of the 2,100 calls going up this week. So 2,100 calls, listeners, again, we are shy of the 2,000 level right now. Can we even threaten the 2,100 level by this time in 8 days? I mean, crazier things have happened, but that does seem like a pretty aggressive move for all things small caps. Worth noting, the 2080 calls also went up about 1,400 times this week. Looks like it could have been a vertical on Wednesday, 500 each going up on Wednesday. and we haven't gone up 900 by 1200 today. So it could be a funky, tight 20 handle vertical. It's still a decent move for the Russell 2000, but maybe a little bit easier to pull off than just straight up loading up on the 2100s. Also worth noting, about 800 of the 2040 calls went up. So that was on today, though. So yeah, funky day today, but it looks like that vertical could have traded and opening for both on Wednesday 500 times as well. So you like that, listeners? You like 2080, 2100 by 8 days in the Russell 2000? Would you prefer just swinging for the fences and buying the 2100s? Or would you prefer to overwrite the whole thing and be done with it? I'm curious. Hit us up. Let us know out there, listening. Mr. Rhoads, anything catching your eye you want to talk about in the world of equities and volatility, sir, or should we roll on to another complex?
Let's do a little preview. I apologize for curveballs on you today. I really do, because I know you had a long day yesterday. But the options on S&P 500 dividend futures is going to be introduced at the end of the month. I've been doing a lot of work on dividend futures, so your producer may want to schedule me that week.
Why don't you give our listeners a quick overview? What are you talking about with a dividend future, sir?
There are futures contracts that are based on the dividend that's going to be paid by the S&P 500 over the course of a year, and you can see in the dividend. I like to use the dividend futures to get an idea as to what the market's thinking with respect to the fundamentals of firms, because if a company starts to run short of cash, or business isn't going all that great, or something like a pandemic comes along, one of the things that people start to worry about is whether or not the company's going to pay their dividend. And the dividend futures at CME Group and their dividend futures at a couple of other exchanges as well are based on basically what gets paid out over the course of a year, and you can trade a futures contract that settles into that amount over the course of the year.
There you go, listeners. Keep an eye on all things dividend futures coming out later this month, the options on them at least. And speaking of things that are going on right now, I think we are legally obligated to round out the show talking a little bit of crypto.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, everybody, welcome to the wonderful world of crypto. And man, I was joking on our last show, Mr. Rhoads, that have you seen a better buy the rumor, sell the fact trade than this whole run up to the ETF approval, which of course we got this week? Listen, you probably heard that unless you were living under a rock this week. And man, folks, we're buying crypto for the last few months hard into this news. And the second we get it today, it's been a lot of selling the fact. Coinbase was down, Mara, Riot, Bitto, all the names are associated. Of course, Bitcoin itself down as well. So just a crazy time out there in the world of crypto. Before I get to the options action, what we can find this week, Mr. Rhoads, what are your thoughts on this whole dance with the ETF, the massive run-up we've seen in Bitcoin and crypto leading up to it, and apparently the big sell-off today, sir?
Money quarterbacking is really easy, and honestly, I just didn't even touch this one because I didn't want to get the crap beaten out of me by a bunch of Bitcoin bulls. But remember back in the day when I was a wee lad running the Options Institute at SIBO, we introduced Bitcoin futures. And Bitcoin futures through the approval process, they more than doubled, or the Bitcoin spot more than doubled, and basically the near-term high for several months in Bitcoin coincided with the launch of the futures at SIBO, and then a week later at CME Group, and then pretty much just started grinding itself down afterwards. You've got to assume the exact same thing has been happening here. And you also have to assume that the market makers, the ones that we're going to be selling, that we're going to be responsible for having an inventory in order to, offset their risk by maybe selling these ETFs, that they didn't just show up and buy a whole bunch of Bitcoin today, that they probably had been accumulating it in anticipation of the launch. So, you would totally expect, there's no reason that you wouldn't expect the same pattern that happened with the launch of Bitcoin futures to happen with the launch of Bitcoin ETFs as well.
Quite the rampage that spot Bitcoin has been on. Coming in, of course, we had the rumors of the hack and the erroneous report of the approval earlier this week. We sent Bitcoin prices into a tizzy, then they sold off. Then it seemed like the market was kind of exhausted for when the actual announcement came out. Then we did see a rally, then a sell-off. It's been all over the place out here in Bitcoin land out here, as you might imagine, listeners. But that news that everyone's been waiting for in our hot little hands now, what does that mean for the Bitcoin options and indeed the ETH options over there at CME? Let's find out. If ever there's a week they were going to put up some numbers, this was the week, listeners. And let's see, coming into the start of the show, the big Bitcoin options. So again, the 5X, these are the beefy boys, doing about 1,700 contracts this week. The big dog, such as it was, 237 of the Jan 50,000 calls. And again, we are not that far from that level, so someone may be taking a bit of a flyer out there. I went looking also at the micro, thought maybe the retail folks would be pouring in. Maybe they would do some more. The micro Bitcoin options only doing about 1,200 contracts this week. So for all the Sturm and Drang about the approval of the ETF, at least on the listed option side over here at CME, not translating into a ton of paper. The same holding true for the ETH options, the big dog ETH options, doing about 500 contracts this week. Again, those are a pretty beefy multiplier as well. So the big dogs, not for mere mortals, listeners. Those are for the folks out there looking to do funds and ETFs and all sorts of fun along those lines. Let's go out to the micro Ether, see if we can find any more paper out there this week as well, listeners. And the answer is yes. So micro Ether doing some paper, about 10,000 contracts on the tape for those this week. So that's a little bit more respectable. The big dog out here was the 2,400 calls in Jan. And again, we are north of that level right now out here. Coming into showtime, we were at 2633. So 2,400 calls going up 2,100 times this week. So those, at least if past is prologue, folks finally probably buying those out there. So, or probably buying those, I should say. So probably looking pretty good for those. I know, Mr. Rhoads, you famously dumped all your Ether on the 2,500 level. What was it, a year or two ago? Now that we're revisiting those levels, has it caused you to maybe think about getting back in, or are you still out completely?
I'm out. I'm too old for that stuff.
You're like what's his face, Danny Glover from Lethal Weapon.
I really haven't paid as much attention to crypto as I probably should, just because everybody else does. I did explore the out of the money puts on the Bitcoin futures, but none of the prices were compelling enough for me to use them. And that's the only way that I would take a short position in Bitcoin is through purchasing put options. But they just looked, I think the implied vol on the ones I looked at, there were a couple hundred points out of the money, was in the 65 to 70 range, something like that. And I just didn't like the price. I just felt like in too short a time, everything had to fall apart. It just didn't seem to make sense to me. So that's as close as I've come to putting my toe back in the water with the crypto space.
Let's see if this stuff makes sense for our audience. It is time for the futures options feedback.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's MIXLR.com.
All right, everybody, welcome to the Futures Options Feedback segment. I was hoping for a little bit more wham, bam, thank you, ma'am, out there on the crypto options, but not really happening this week unless you're really fixated on the micro Ether front. But outside of that, still not a lot really matriculating. Be interesting to see, you mentioned, your old friends getting back in those waters again, I think in a couple of weeks. So it'll be interesting to see with more listed options, or let's just say listed derivatives, the options will probably come down the road. If that helps to drive more paper. Of course, now we're going to have the spot ETF. That will, of course, eventually be optionable as well. And that'll certainly be intriguing to see how the flow out there lines up. Everyone right now is slinging Mara. They're slinging Riot. They're slinging coin options on all these things. Bitto. This new spot ETF. We'll see what kind of paper that does out there. But right now, Mr. Rhoads, our flash poll that's trading right now as we speak, going up there right now. This went live right before our last show. Is along these lines, we asked you, hey, the spot Bitcoin ETF is finally approved. So quite simply, in the wake of that, do you think Bitcoin will close positive on the year? Heck yes, heck no, or I don't trade crypto. Mr. Rhoads, I know what your vote is, but where do you think our audience is voting for?
I'm drunk at Costco.
That would be a good writing.
You ever say that?
Drunk at Costco?
There's somebody that does. No, there's somebody that does polls on Twitter, and that's always the fourth choice. If you have no opinion, you're supposed to say you're drunk or at Costco.
Oh, it's kind of hard to get drunk at Costco unless you're like taking it off the aisle and drinking it while you're shopping.
Oh, I think you could wander Costco and get a full meal from all the samples and probably sneak a couple of beers into the bathroom. Nobody would know the difference. But yeah, I'm not. I'm opinionless. So
what do you think our audience is voting for?
What do you? Which one was the bearish one?
That would be heck no.
I don't remember the exact wording. So
it's heck yes, heck no, or I don't trade crypto.
Heck no.
All right. Well, it's exactly the opposite. 2/3, 66.7% saying heck yes, Bitcoin will close positive on the year. 22.2% joining Mr. Rhoads saying they don't play. Apparently they are drunk at Costco. And well, that's a new one for me. And 11.1% saying heck no, they're joining the Mr. Rhoads camp. But Mr. Rhoads, our actual question, that's kind of like our silly flash poll, our actual sentiment poll for this week, listeners, because it is the beginning of the year. It's time to gauge your sentiment on all sorts of fun topics. Is this, Mr. Rhoads? Again, kind of a simple one. Will the S&P 500 close positive on the year? Again, heck yes, heck no, or who cares? I'm trading crypto, or for the case of Mr. Rhoads, who cares? I'm drunk in Costco.
I'm drunk at Costco and I'm short in the market. So I think lower.
Wow, I like it. You think our audience is going that way as well?
Probably not, and that makes me really happy. Because I want to be a contrarian.
You're right. You get to be the contrarian today. 73. This is the most bullish I've seen our audience. Our audience usually fades the hell out of every rally. So if even our audience is buying in, I don't know, maybe the contrarian light is going off in my brain as well. 73.3%. I can't remember the last time I saw this large a percentage of our listeners just caught up in the market. But yeah, 73.3% saying it will close positive on the year. 21.7% saying heck no. So joining Mr. Rhoads and potentially myself. And I haven't voted officially yet. I don't want to color anybody. And then 5% saying who cares, you're in crypto. Get in there. You got till the rest of the end of the week, listeners, to the end of the day tomorrow to make your votes. We have folks writing in saying, who cares, I'm selling vol. Who cares, I'm making money in any direction. So we should have had a write-in, unlike Mr. Rhoads is drunk at Costco. We should have a fourth write-in to say, who cares, and then fill in the blank with whatever your choice is. Maybe you're just trading vol, or maybe you are just trading something else, in which case we want to hear that. So you can write in with your whatever is floating your boat out there, listeners. But right now, our audience firmly bullish on both crypto and indeed on the indexes. Before we get out of here, let's get one more question in because I'm feeling generous. Let's go out to one of our pro members, Age Adel Aquarius. He wrote in this week because he was commenting. CME put out a tweet about their event contracts, adding, I think it was more. They're adding more event contracts, and he wrote in to say, "Are these things getting any volume?" And he linked to their CME Group daily bulletin. He says, "If I'm reading this right, the S&P 500 event contracts had a volume of 1,757 for December. Is that right?" And the answer is yes, you are correct, Mr. Age. So they're not exactly lighting the world on fire. As you'll recall, we've talked about them a few times here on this program. We've had whole segments. We had the CEO of NinjaTrader on with us last year to talk about these. We also had Nick, who's a big fan of these, creator of QuickStrike, on to talk about them. So we've had a couple of shows dedicated to these event contracts. Cool in concept, as our listener points out here, not exactly lighting the world on fire. Now, CME may be realizing that and trying to add more expirations, more products out there So maybe that was the gist of it. Yeah, what drove all this was CME tweeting out that they're going to launch longer dated event contracts starting on January 29th. So bucking the trend, not going shorter duration, going longer term. Mr. Rhoads, what are your thoughts? I don't think you and I have really chatted about these binaries over there at CME. What are your thoughts on these and the fact that they're adding more to them, even though, as our listener points out, not exactly lighting the world on fire yet?
Well, first off, the launch of any new derivative product, it's what I wanted to do my dissertation on, and it got shot down. I know that I've said that to you before, but I did do a lot of preliminary research, and 50% of new products that are launched never trade a contract, so they're already in the top half, and you've got to assume that in conjunction with binary event products, that short-dated index options on the stock market are things that you could combine for some sort of a trade, especially if you're of the mind that good news is going to be bad for equities, bad news is going to be good for equities, or you've got an idea as to whether you think some event is going to be bullish or bearish, but you're not sure how the stock market's going to react to it. I used to say for years that when I was working at equity hedge funds, you could tell me all the numbers the company was going to report around their earnings. I could get all those numbers a day before, but I'm not 100% sure I could effectively trade it, because you really never know, what the market's anticipation is, not what's in print, but what the market's anticipation is with respect to different numbers. We got that employment number when I was on Vol Views last week with you. We talked about that a bit. How, is bad news good news now? Where are we at with respect to that? So I do think if there's some work to be done there, but combining equity, bond market outlooks as well. Bond market's probably more sensitive to events than stock market, depending on where we are. But being able to combine those. I think that that offers trading opportunities that should be explored more, for sure. And I like going out farther because we talk about the impact of what everybody thinks the Fed's going to do next at different dates farther out in the future. It would be interesting to see event contracts that don't necessarily match up with the FOMC announcements, but maybe match up with other major economic numbers that we're going to see as we move closer to the next Fed announcement, et cetera.
Yeah, I like these binaries. I'm on the record saying I like them. They're good gateway drugs, entry points for maybe newer traders who can't afford or don't want to invest all that amount in a full premium contract. Here you go. Nice bite-sized way to trade these things. Going longer term is an interesting approach to them. We don't see a lot of long-term binaries, so it'll be interesting to see exactly what duration they're talking about. But right now, they're intriguing. We'd love to have more to talk about with these event contracts. Not quite there yet, but we're hoping maybe this is the year. Maybe this is the year, Age and everybody else who's intrigued. This is the year that binaries take over. Everything else, short duration and near term, is fixating people. So maybe binaries are the next step on that trend. Unfortunately, listeners, that music means we are done with TWIFO for today. But before we go, Mr. Rhoads, if folks want to reach out to you, talk about your research or anything else you got cooking, where should they go? What should they do?
Following me on Twitter, my full name at Russell Rhoads. I got a scorcher coming out that I'm basically locking myself in a room to finish this one. But Ed Thorpe, if you remember, he was a card counter. He's been around for a million years. And I got to meet him once at a SIBO conference, and I got to interview him. Then I got to talk to him off the record. And off the record, Ed Thorpe said something that is sticking with me forever, which I said, so where are you looking now? And he said, I don't really know, but I'm always trying to look where everybody else isn't looking in the markets. And yeah, you mentioned that the majority of your folks are bullish. And I said, well, that's good, because I don't want to be where everybody else is. Everybody's trading 0 data expiration options. I have found all kinds of great opportunities in options with 2 to 5 days left to expiration, where people aren't looking And I just I've got some great results. I just got to finish writing up the 20-page paper on the NASDAQ ones and the 20-page paper on the S&P ones. But everybody's looking at 1 day and 0 day. That's not where you should be, man. You should be 2, 3, 4, and 5 days. Those aren't being priced nearly as efficiently as the 1 day and 0 day.
There you go. Mr. Rhoads, check him out over there on Twitter. 2 S's, 2 L's, RHOADS, all one word. And of course, you know where to go to find all these TWIFO reports and everything else they have cooking over there. CMEgroup.com/TWIFO, TWIFO. Back again tomorrow, noon Central, 1 p.m. Eastern, to talk about all the vol that's kicking off the new year. After that, exclusively for all of our pro fans, we're back again 1 hour after vol views for a little bit of the old options oddity. Should be a fun one this week. It's fun every week, but should always be fun this week as well. A lot of fun trades already on our radar for that show. And then, of course, we're off for the MLK holiday next Monday, listeners. So no option block, no crypto, unfortunately. It'd be a good time to have a crypto rundown, but the market gods not conspiring with us all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.